Hey everybody, everything new under the sun here. This is your economic quick update for the day. Bit of news, and first thing I want to look at is a couple of word definitions as we look at currency, what the dollars and cents are that we hold in our pockets, and what real value is. Because the story that I'm going to talk about is discussing real value versus fake value. First of all, I'm going to use the fancy lookup option on my MacBook here, and we're going to look at, oops, let me move that to the center here. Fungible, the first word that I want to look at, of goods contracted for without an individual specimen being specified, able to replace or be replaced by another identical item, mutually interchangeable. Money is fungible. Money that is raised for one purpose can easily be used for another. So you got a $5 bill. If you got two $5 bills, you can exchange that for a $10 bill. And that's what fungible means. So our fiat currency is fungible. It can be traded for something of the same value there. Now, what does fiat mean? A formal authorization of or a proposition, a decree adopting a legislative review program rather than trying to regulate by fiat, an arbitrary order, the appraisal dropped the value. And so what fiat means is basically a piece of paper that has been authorized by the government and is told by the government to mean something. So the law tells us that a $5 bill is worth $5. And so we can trade it for another $5 bill or goods of $5, and the people who exchange the goods for that $5 bill understand that they can go to the bank and convert it to $5 of something else. They either can keep it or they can use that $5 and pay for some other item that's worth $5. Now, intrinsic, here's where we get into the real versus fake money. Intrinsic, belonging naturally, essential, access to the arts is intrinsic to a high quality of life, contained wholly within the organ, within it acts. Intrinsic, from the thesaurus, inherent, innate, inborn, inbred, congenital, connate, deep, natural, rooted, deep-seated, indelible, ingrained, and so on, fundamental, essential. What intrinsic means is that something that has intrinsic value means that it has actual value. So a $5 bill or a $10 bill in it by itself has no value. It is agreed to have value by way of its through it being fungible, and the fiat system decreed by governments. But if you take the $5 bill or any bill, it's not worth anything itself. It's just paper or plastic or whatever it is now. The Canadian currency is all plastic now. There's no metal in it that's of any value. I mean, you can't eat it. You can't burn it. You can't mold something out of it. You can't make electronics out of it. It's just a piece of paper. It's just an IOU. It says, I am worth $5 and I can be traded for $5 worth of goods. And as long as we all agree to that, then we're all good. But in and of itself, currency, $5 bills, $10 bills have no intrinsic value. So we're talking fiat versus intrinsic. And so I take you to the Zero Hedge article here. Bitcoin or gold? Did the alleged Bitcoin creator just settle once and for all for what is more valuable? And this is the Australian tax authorities were questioning Wright, who is the guy behind Bitcoin there. We write the story of Craig Stephen Wright, who was outed by Wired and Gizmodo as Satoshi Nakamoto, the pseudonymous founder of Bitcoin. Hours after two articles pegged Wright as the man behind the myth, Australian authorities moved in, raiding the residence. Coldfish Craig, as he was known in his neighborhood, rented with his wife and conducting searches and interviews. So there's tax authorities going after Wright Now we get the latest twist in what is already a fairly bizarre story, the Australian says, that in May of 2013, Wright, the guy who created Bitcoin, attempted to buy some 85 million in gold and software from Mark Ferrier. So now there's a whole bunch of issues there where there's he wasn't paying his taxes, whatever. Mr. Ferrier is alleged to have told Mr. Wright gold was good security in the event of funny money Bitcoin failed. And so there were payments back and forth and tax issues. Let me get kind of down to the point of the article, the piece that I want to talk about. For those interested in attempting to get to the bottom of this, you can read more here. Just use the word Ferrier and search for that. What's immediately interesting, he says, however, is that while Ferrier might not have actually wanted any Bitcoin, it does seem clear that Wright did and still does want gold. Wright being the founder and creator of Bitcoin. The takeaway: if you believe Wright is Satoshi, then the founder of Bitcoin is skeptical enough of his creation's intrinsic value compared to hard assets that he was at one time willing to trade a sizable portion of his cryptocurrency wealth for gold. This is where it gets into, is Bitcoin actually of value? Now, Bitcoin could be of value. It does appear to be heading upwards. It could be a good investment. There's lots of good investments, but that doesn't mean they're worth any real money. If you own $1 million Bitcoins, sure, it's worth money right now as long as the economy doesn't crash. It's worth money, but it's an investment because you never know if it could go up or down. And this is really where we get into the intrinsic value. If you hold a million Bitcoins or even one Bitcoin, that's worth nothing. All it is worth is faith in the Bitcoin system of cryptocurrency. It's only worth what people are willing to pay for it, and as long as people want Bitcoins, it'll be worth something. As soon as people don't want Bitcoins, which are ones and zeros, computer generated values, you can't hold anything. It's worth money as long as they want it, and as long as the economy doesn't implode, then there might be some value into it. But it's no better than investing, and it may be you may make a lot of money investing in Bitcoin. But if the economy goes south real bad, then it's going to drop in value, and at the end of it, you can't eat it. You can't make something out of it. It's fake. It's even faker than fiat money because you don't even have a piece of paper that you're holding. It's all digital. So this is where it gets into, what is better, and in this case, precious metals for one. Now you can't eat precious metals, but precious metals are limited in terms of resources. They are used for computer components. They're used for building all sorts of things. Gold has a lot of amazing properties that are useful to the technological world, and also they're just viewed as beautiful by most people in the world for jewelry and that sort of thing. So there is intrinsic value there, where you can hold a piece of gold, for example. It's BitGold there, which is a spin-off of Bitcoin, but you can hold a piece of it, and it's valuable. It's worth something. People recognize what it is, and if you're holding that piece of money, it's worth something. It's not just confidence. It's been worth something. Gold and silver have been worth something for the last 6,000 years of human history. And like I say, you can't eat it, but you can make electronics out of it. So there's value outside of just there's value there. It's not just a piece of paper that has an IOU on it, that is written on it, that the government says is worth something. Everybody in the whole world recognizes that it is worth something, and that's why it has intrinsic value versus just fiat value. And so the fiat value, Bitcoin, I would say, has somewhat of a fiat or a confidence-based value, but in the end, precious metals and things like that will still be around and will still be viewed and valued and useful for things, for building things, whereas Bitcoin and fiat currencies will not. So that's why Bitcoin, while it's a good investment, it's not a hard asset. and it's always good to diversify um, your holdings so that no matter what happens in the markets, whether they go up or down, you'll be good to go with hard assets of some sort, at least some portion of your wealth, if you have any wealth in hard assets. So that includes chickens, pigs that you're raising, chickens you're keeping for eggs and meat, and that includes precious metals, and that includes your house and other assets that generally increase in value. But even if they don't increase, they are assets that you can then go and liquidate. And liquidate just means moving from a hard asset to fiat cash, whatever that cash is at the time, whatever the fiat currency is at the time. So I just want to do a bit of a definition of the terms there and discuss this interesting article, Bitcoin, and I don't have really any interest in it. It looks like you could make a lot of money off it, but at this point, I am of the opinion and of the group of people who suggest that precious metals is a good place to be, as well as having chickens on your property and paying off your house, basically, to leave that as a good asset. All right, that's it for now. We'll talk to you guys later.